Well, hello, and welcome to another episode of the Legal Gym Podcast, and not just any episode today. This is episode number 10. You know what that means? That means this is a legitimate podcast, because most podcasts fail before they get to episode number 10, but not this one. We're at episode number 10. So thank you so much for joining me today. Today, we're going to be talking about 10 ways that you can save money on your taxes before the end of 2021. Now, before we get into this, I have a question for you. Have you ever started working on your taxes in maybe February or even March and realized that all the deductions that you didn't take because you didn't think to take them back in December? Well, yeah, this episode is going to help you with that exact issue. So today I'm going to share with you the 10 things you can do before the end of the year to make sure you lower your tax bill for 2021. And for the show notes for today's episode, which will include all of the links and resources for everything that I'm going to be discussing today, make sure you head on over to hawthornelaw.net/010. You can get access to all that information. All right, let's go ahead and dive in. This is going to be a real nice, clean episode. We're just going to go through all of the 10 points one by one. And so the first one that I have for you today is to make sure that you're going to go ahead and prepay your bills for 2022. Now, this is a great time right now. This week is Cyber Week. This is a great time to take advantage of those Black Friday or Cyber Week specials. If you want to, you can, if you're renting office space, you want to go ahead and prepay your rent for January. You can pay that rent in December. This is a good time to send in some extra cash to pay for your office utilities, to prepay for coaching, anything you can do to really prepay for a bunch of expenses for 2022 and pay those here in 2021. This is a great tax deduction for you to save some money off your taxes this year. So that's number one. Go ahead and prepay any bills that you can that would be ongoing or a monthly obligation that you would have in 2022. Prepay those here in 2021. And this is a great time for me to go ahead and plug the Cyber Week special we're doing for OB Foundations. If you want to learn more about that, go to obfoundations.com/cyberweek2021. So the second thing that I want to share with you today, the second tip, if you will, is to sell your stock losses. So if you have stocks that have taken a loss and they're in a taxable account, this isn't going to help you if they're in a retirement account. Make sure you sell those stocks before the end of the year. You can deduct up to $3,000 of capital losses against your ordinary income. And if you have more than $3,000 of losses, you can roll over whatever is left to 2022 or 2023 or really as many years out into the future as you would like. So make sure that you sell those stocks that you have a loss in. Now, be very, very careful when you do this. If you sell those stocks for losses, you do not want to repurchase those stocks right away. Because of wash sale rules, you have to stay out of a substantially similar security for at least 30 days before you purchase that stock again. Otherwise, the loss will be disallowed on your taxes. So go ahead, sell your losses, and then that brings us to the next point, which is to wait to rebalance your stock. So if you sell your losses, or if you even sell your mutual funds before the distributions are paid out this year, then you can actually save yourself quite a bit of money. And then if you wait those 30 days, like I said before, and rebalance in January, then you're going to take advantage of the tax savings from selling those losses, as well as the tax savings from not getting hit with the capital gains distributions from those mutual funds. And then you can wait 30 days and get back into the market. Number 4 is you want to go ahead and max out your pre-tax retirement savings. So if you are a solopreneur, you work by yourself and you don't have any employees that are U.S. citizens, you can take advantage of a solo 401k and you can contribute up to $19,500 plus an additional $6,500 if you're over the age of 50. Plus any additional employer contributions that your business might make on your behalf, up to $58,000 you can deduct from your income. So the thing about this is you have to contribute to your solo 401k before the end of 2021. You can't wait until next spring, like with an IRA or something else like that. Now, this is also a great idea if you are working for an employer and you want to go ahead and max out your 401k before the end of the year. You can do that, boost your 401k contributions, and then in January, you can take them back down to a normal level if that's what you would like to do. So go ahead, take advantage of those 401k deductions. They are huge, and they're going to save you a lot of money on your taxes, and they're going to give you a nice bump with the stock market doing what it is right now. Number 5, if you itemize, this is only going to work if you itemize, give stuff away before the end of the year. So this is a great time of the year to declutter and clean your house and give the stuff away that you no longer need to someone else who can take advantage of that. And these could be things like old clothes, baby toys, old books that are still in pretty good condition. Anything related to your kids that you're trying to get out of the house, great opportunity to give that to someone else who can actually use those items to a charity of your choice. So highly recommend you take advantage of this deduction. If you take the standard deduction, you can still give away your old belongings, but you can only take a deduction for cash donations up to $300 or $600 if you are a married couple. The 6th tip I have for you today is to consider making a Roth conversion if you believe your income is going to go up substantially in 2022. Now, basically, what you're doing here is you're taking money that is in a tax-deferred account, such as a 401k or an IRA or something like that, and then you're converting that money into a Roth account and paying the taxes on that conversion. But you only want to do this if your income is going to go up in 22. There are some very specific rules about how to go about doing this. I do recommend you talk to a tax professional if this is something you're considering, but it is a great way to you're going to pay a little bit more in taxes now, but in the future, when you want to take that money out tax-free, you'll be able to do it if it's in a Roth IRA. The 7th tip I have for you today is to consider contributing to a 529 plan. Now, this is going to be best if you live in one of the 32 states that allow you to actually deduct the contribution. I do not live in one of those states, but the benefit to me, if I wanted to contribute to a 529 plan, is that the money will still continue to grow tax-free and can be withdrawn free from both federal and state taxes if it is used to finance my children's education. So, if you don't already have a 529 set up for your kids, this is something you might want to think about doing, and go ahead and contribute to a 529 plan on their behalf. And if you live in one of those 32 states that allows you to deduct the contribution, all the more power to you. Number 8 is to go ahead and maximize those work-related travel expenses. So you can deduct things like transportation and travel for work purposes. This could also be meals and entertainment, dues, uniforms that you would not use for something else, and work-related educational expenses. This is a great time to prepay some tuition for the spring if you're going to be taking courses that are related to your employment. If you need to purchase uniforms for your job, this is a great time to do that. So maximize those work-related expenses now before the end of the year and take a nice deduction on your taxes. Tip number 9 is to make sure that if you are required to take a required minimum distribution, if you have an inherited IRA or if you have retirement accounts and are at least age 72, you want to go ahead and schedule those required minimum distributions and take those before the end of the year. The penalty is 50% if you do not take a required minimum distribution and you were supposed to. So you want to make sure that you go ahead and do that. And the last tip I have for you today is to make sure that you defer your income if possible. So if you believe that next year maybe you are going to pay less in taxes than you would this year, then you may want to defer your income. Now, how do you do that? Well, if you are a consultant or some sort of freelancer who gets paid with a check near the end of the year, make sure that you wait to deposit that check until January. That's one way to defer the income. Also, if you are, and this is something that we're going to be doing here with OB Foundations, is you can offer free trials to your coaching or membership programs in December, and then in January, the monthly fees can start for those programs. So you can actually delay your income by getting people to sign up with free trials and then charging them after 30 or 60 days or something like that. And if you are in the process of launching on a very regular basis, you might want to wait and not do any launches here in December. Do your next launch in January. So there you have it, the 10 things that you can do. I'm going to go over those real quick with you here one more time. The first one was to prepay your 2022 bills. Number 2 is to sell your losses if you have stock losses from investments. Number 3 is to wait to rebalance your stocks and sell before the distributions are paid out, and then wait 30 days and rebalance in January. Number 4 is to make sure you max out your pre-tax retirement savings. Number 5 is to give your stuff away before the end of the year if you're going to itemize, or make a cash donation if you do not, or do both. Number 6 is to consider doing a Roth conversion if you think your income is going to go up in 2022. Number 7 is to make sure you contribute to a 529 plan for your children's education. Number 8 is to maximize those work-related travel expenses and other miscellaneous expenses. Number 9 is to schedule your required minimum distribution if you have an inherited IRA or you have retirement accounts and you're over the age of 72. Number 10, the last one, is if you believe your income is going to be lower next year than it is this year, then you might want to defer some of your income from this year to January through either free trials or by waiting to cash checks until January as well. So there you have it, 10 tax tips that you can use to put into place before the end of the year. So all you Legal Gym listeners out there, now that you know more how to save money on your taxes, you're ready to implement. So go ahead, check out the show notes page for this episode. It'll be at hawthornelaw.net/010, and you'll get links and resources for everything we talked about here today. And also, don't forget, if you're interested in prepaying for some of that coaching I talked to you about, we are running a Cyber Week special this week only through Friday at midnight, and you'll be able to get 40% off an annual plan if you sign up for OB Foundations this week only. So that's it. That's all I got for you for today. Hope you have a wonderful week, and thank you so much for listening, folks. I look forward to talking with you in the next episode. Take care. Have a great week.